Next up, we have team CCX.
Okay, first of all, thank you so much, judges, for spending your valuable time. And we are really excited to present our vision for CCX and what we are building. Before that, I just wanted to make a simple statement, which is probably the reality today, is Web3 has probably gone mainstream for almost over a decade now. But if you look at a pressing question, how many countries have been able to integrate Web3 natively into their economic systems? Well, the answer is not a lot many. But today, all of us are here trying to achieve that. And that's exactly what we are trying to do at CCX. At CCX, our thesis is simple. We want to focus on emerging economies. The biggest opportunity for blockchain in the next decade will come in emerging economies. And that's why we are launching the world's first suite of on-chain stable coins native to currencies in emerging economies by building a seamless bridge between Web3 and Web2. A bit about myself and my co-founder Vibha, who's joined with me. I'm Adhikar. I come from the finance background. I was with Goldman Sachs covering their hedge funds and private equity businesses, managed over $1.4 billion in mandates during my tenure. I'm also an entrepreneur at heart. I started my fintech venture in cross-border payments and then scaled it to over 3 million users before it was being successfully acquired. I've also been around Web3 for almost half a decade now, working on a number of projects in gaming, metaverse, more importantly, being on research teams that led investments into protocols like Polygon. And Vibha really comes from a very strong understanding of blockchain. She's from Cornell University, one of our most famous universities, if you think about Avalanche, and I'm smiling there. And she's also been trying to continue the amazing work which the likes of Emin have been done at IC3. And she's actually led some of the major CBDC projects in Asia, probably only half a dozen people in the world to have worked in Oracle Blockchain Center of Excellence to do that. And I think today I'll set up the context. We all know the future of finance is decentralized and tokenized, yes, but we believe most importantly, it should be regulated and it will be regulated. Why is that? Simple. I think all of you sitting here already know, but even till today, even after 10 years, we still have narratives such as pump and dump, hacks, front running happening in the DeFi world. Public blockchains, technology is great, but even till today, they operate in a regulatory gray area in a number of jurisdictions, which make them unsuitable for transactions to happen at scale. And the third is Web3 adoption has a long way to go. We are still in a siloed ecosystem. Yes, there are a number of companies trying to build interoperable bridges, but even till today, there's nothing which has been able to bridge TradFi with DeFi. And that's one of our biggest objectives. And we believe Web3 and DeFi is entering the next phase of adoption. Why is that? All of us today are sitting here speaking about the next bull market in crypto. How has that been possible with TradFi entering this arena, right? That's where we believe regulation, compliance becomes so crucial in this world. And this is my most favorite slide because I think one of the big innovations which happened in the Web3 world has been stable coins. It has given immense value. Look at USDC, the kind of impact they've created for millions across the world. That's where we believe how can we add more utility to existing stable coins in the market and more importantly, get them to access emerging economies. That's where CCX was born. What is CCX? Our thesis is simple. We want to enable the mass adoption of DeFi and Web3 by connecting each country's native economic system to public blockchains exclusively on Avalanche. How are we doing it? We are launching the world's first CBDC-backed stable coins in native currencies of emerging economies. A quick background of why this is a good partner with the existing stable coins. One, we are fully collateralized in the native currency of the emerging economy in a 1:1 ratio. And because both CBDCs and stable coins are native to blockchains, you can track the reserves on-chain in real time at any moment. That's where we are bringing in an industry-first real-time transparency. And the third, which is our biggest use case, is interoperability with traditional fiat systems. Tomorrow, you'll be easily able to access commercial banking applications with purchasing stable coins. That's where we want to get to over the next 3 years. And this is the powerful Web3, Web2 tech layer we are building for emerging economies where Avalanche subnets will be powering them, where each country will have a specific subnet of their own. The CCX stablecoins will be issued, for example, on India, Nigeria, Bahamas, you name it. We bridge them, back them with the CBDC chains where the CBDCs reside for each of their countries. And this is the communication layer which we are building to make sure this happens seamlessly. The use cases, I think stablecoins, as I said, is one of the biggest innovations. The most important area we want to focus on is how can we get crypto in the hands of people. Yes, we have mobile wallets. Yes, everything is happening. but can we get them to seamlessly swap in seconds and get it on chain to purchase a pizza, pay rent? That's where CBDCs come in. Because both are inherent to blockchain, you can seamlessly swap instantly. Asset tokenization, I think, is a huge theme in Web3, and that is where we want to focus on. If you look at a lot of institutions or governments, they are looking to tokenize their assets, but on permission blockchains. We can be an enabler for them to access tokenized assets in permission environments. And most importantly, one of the favorite use cases we are building is by tomorrow or whenever we build the solution, any USDC holder across the world will be able to seamlessly swap USDC for the native currency of an emerging economy. And that's the utility we are trying to add to the existing stablecoins such as USDC. And why is this a big opportunity? I want to focus on emerging economies because 93% of the world's emerging economies, not the developed countries, have either launched or in the process of rolling out CBDCs. And that's what brings me to the market opportunity and size. We all know how public blockchain is expected to grow in the next 3 years. CBDC, especially in the emerging economies, is expected to grow significantly. And that's where our thesis comes in of actually reaching the next billion. Yes, everyone talks about bridging the next billion users. How are we actually going to achieve it? Today, if you look at crypto to fiat payment systems, they are only available in UK, US, EU seamlessly. But there are a good 100 plus countries with 6 billion population who still struggle to seamlessly integrate their native currencies or economic assets into Web3. And that's the opportunity we are trying to achieve. And in terms of market momentum, India is leading the charge in CBDCs. India's digital currency just recorded 1 million transactions per day. You look at UAE rolling out the CBDC strategy, the Bank of Jamaica, South Africa, Mauritius, all of them are building out their own CBDCs. Hong Kong, Banco de Brazil, Philippines, Bank of Japan, World Bank, almost every major economy who wants to get into this field. Again, it depends on the country, whether they want to get into CBDC or not. That's the choice up to them. But whoever is very actively involved in this space. And this is where we believe we are building foundational infrastructure for DeFi 2.0. Regex Fabric is our proprietary layer where we've integrated KYC, AML, transaction wallet holding limits of 56 countries, which can seamlessly include institutional and retail onboarding. How is that possible? For example, in a country like Nigeria, you have a CBDC wallet holding limit of 5 million. You cannot exceed that. We've already incorporated. India has a wallet holding limit of only 20 million digital rupees. We've not exceeded that. Interoperability with fiat systems, that's where the big opportunity is. We are in the process of rolling out a technology where you will be able to use our APIs to integrate with commercial banks in emerging countries. That's the pilot we are working on currently. And regulatory certification, again, bridging regulation with Web3 is the biggest theme right now. And this is a bit amount of traction, what we've done. We are on track to achieve 1.5 million transactions on testnet by the end of this quarter. And we are happy to announce that we just received an LOI from one of the largest emerging economies in the world. That's India, which gives us an order pipeline of 50 plus million over the next 9 months when we launch the pilot later in the year. We've received certification from International Token Standardization Association. We've graduated from the Cornell Blockchain Accelerator, part of Avalanche Codebase. That's why we are here. And more importantly, we've got an amazing set of mentors in both central banking, traditional finance, and emerging markets on board. And their guidance, Grace sits on the board of governors of Fed. Bizer comes from a very strong understanding of traditional finance. He's the global head of DLT at Citibank. John has done exceptional work in the African continent, and their guidance in building out a system like this, I think, is invaluable over the next 2 to 3 years. And I think I'll just take 30 seconds or a minute to wrap up the presentation and tell you why this is important or how CCX stablecoins is important. I think DeFi 1.0 was liquidity mining, yield farming, lending, borrowing. But I think DeFi 2.0, we'll see the likes of green energy financing, loans being tokenized, bonds being tokenized in adaptation to the local population of an emerging economy. That's where we believe a huge opportunity comes in. TradFi Bridge, as I spoke, it's about integrating it with existing traditional infrastructures. How can we do it? How can we get commercial banks on board to get comfortable with Web3? That's where CBDCs come in. And more importantly, onboarding the next wave of crypto natives, right? Like, everyone talks about how can you do that frictionless onboarding. How is that possible? Only when you integrate it with traditional financial systems. And that is where we really want to bring and remove that stigma of Web3, where people are still more comfortable with traditional banking, right? How can we get these guys on board to Web3? And I think another reason, and this is not me pitching as the founder of CCX, but I think at the end of the day, we want to work with everyone here, right? Like all the other 14 teams on Codebase, whether it's SocialFi, Marketplace, Games, Creator Economy, each one of them can now offer instant off-ramps to their users in emerging economies, not just today, tomorrow, but potentially even attract more developers in that region. That's the big opportunity we are working towards. And today, we wanted to announce something big. By Q2 of 2025, we are expecting a partnership with the Economic Secretariat of the Commonwealth Group. Once we complete our pilot with India, which is the largest economy in the Commonwealth Group, that's given us access to getting a pilot like this, is because once we complete the pilot with India, we are going to present a joint success report to the Commonwealth Secretariat to give us access to pilots in these 56 countries. What are these countries? You name it, right? From Africa, Asia, Europe, Caribbean, Americas, Pacific, there are quite a bunch. We'll probably start off with 10 and then scale it from further. But I do believe this is a huge opportunity for us in terms of roadmap over the next 3 to 5 years. And that is where, just putting in some numbers, obviously being humble enough to say that whether we can achieve it or not remains about market dynamics. But this is just about where we see ourselves in terms of the reach we could potentially target. Obviously, we may not realistically reach all the 2.2 billion people, but even if you're able to reach a few percentage of it, I think that's a win for us. And that's the reason why we are also raising our pre-seed round to fund this growth. And with that, these are all the central banks we met. Everyone seems to be happy because they do believe Web3 is a big innovation on hand. So with that, I'll probably stop and say thank you.
Yeah. I feel like I have to jump into this one, representing Sarkon, stablecoins, and kudos to you and your team for tackling this big, hairy problem of global finance. That said, I think what I saw a lot in the presentation here that makes me wonder is there's so many dependencies, right? There's so many dependencies and so many hurdles, socioeconomic, political, government, et cetera, et cetera, et cetera.
Yeah.
I'm trying to understand where is the tech solving this problem more than the social issues that you're addressing here.
Yeah, no, 100%, Sandra, 100% agree with you that there are a lot of variables involved. But I think two ways in which we can approach this, right? One is if you're looking at really getting in Web3, I think you have to make the regulators comfortable with this technology. And that is why we chose CBDCs as a tool, because every central bank across the world, especially in emerging economies, wants to increase the adoption of their CBDC. And they're looking at infrastructure providers who can do it. And that is where we are coming in and saying, tomorrow, we'll get people, it could be 5 million, 2 million, 3 million people to come and use your CBDC because we are launching CBDC-backed stablecoins. And once you make them comfortable, they'll start to say, okay, this is an interesting technology, let's try and do something different. And coming to the political or social side of this, 100%, whenever we've spoken to any country, I think sovereignty is a huge election issue, right? And I think we play to it because when we are saying that we will launch in your native economic currency. So when someone goes out trying to, for a rally or whatever in a political way, they bring that sort of rhetoric that, okay, we are protecting our currency in one way. So it adds to that. We try to play in that angle. And I would say in a lot of ways, it is a challenge. No doubt, I think over the next 2 years, when we launch pilots with a number of these countries, that's the roadmap, is making sure we get these regulatory fabrics on board, making sure the big guys understand the potential of this technology. I think once we get them in the bag, they'll open up doors. But again, it's a challenge. No doubt about it. Let's be honest. Probably if you think it'll take 18 months, it probably might take 24 months or 36 months. But I mean, that's the sacrifice we're willing to make and give it a shot. So that's all I can say.
Just a quick question, man. One, I think you guys have great credentials. Love the ambition, of course. What do you think the demand driver is for these currencies? I mean, to me, I think like the best thing that's happened in crypto largely has been US dollar stablecoins, people around the world being able to access the best financial product ever. In a world where you take 30 emerging market currencies, CBDCs, turn them into stablecoins, who wants them and why? If anything, it feels like to me, people just would want to get out of them.
Correct.
So what are the demand drivers?
Sure, 100%. I think there are a couple of demand drivers here. Today, there are millions who are actually holding USDC in a lot of emerging economies. And even till today, there's no regulated bridge of actually getting it back to your fiat account. But through CCX, what they can do is swap USDC with the CCX stablecoin and then transfer it back to their bank account. And today, in emerging economies, people have to pull out all sorts of funny business to off-ramp. The fact is that, like in India, you're taxed at 34% if you use a centralized exchange, get it on board. These are some of the big issues happening. But because we are getting regulators on board, and a lot of these transactions, trust me, happen in emerging economies in cash, right? So central banks across the world are trying to formalize the economy. So we've got central banks on board. That's done. For users, it's about getting crypto to fiat instantly, right? And the second and the most important part is today, if they want to access what DeFi offers, it's extremely difficult in emerging economies. We are giving them a gateway to offer what the value, the immense value which DeFi is bringing in, whether it's on-chain loans, bonds, stocks, whatever you name it. These guys will be able to access Web3, make their returns, derive the value out of the Web3 world, and then get it back to Web2. Because at the end of the day, it has to pay bills, right? Like even till today, yes, maybe 20 years down the line, we can use Bitcoin to pay for a pizza. But today, we still have to use a US dollar or an Indian rupee. And that's the big demand driver, is how can we derive value out of Web3 and then get it back so that I earn, right? Like if I want to buy a property for my parents, how can I potentially invest in a, token which goes 10x and get it back? That's a huge demand driver, and emerging economies will always look at it. People in these countries will always want assets which give higher yields, and that's where we are adding the value of Web3, getting it back to Web2, so they can access real world assets.
And to also add, I think India has been doing a lot of work in the CBDC space, especially when they rolled out the retail CBDC. They reached like 1.1 million transactions. So I think in terms of CBDC, the nature of CBDCs, like India has been very cooperative and friendly with integrating.
Yeah, so that's almost like a proof of concept for what emerging markets hold. And India is probably a country of 1.8 billion people. So when you get that level of excitement, I mean, hopefully, as you said, 100% out of the 100 or 150 developing countries will probably end up being successful in 30. But even that's a huge number. Or probably just being successful in 10. But even then, I think 10 countries, stablecoins in their native currencies over the next 3 to 5 years is a huge win. So that's the approach we are trying to take. So yeah.
Guys, thank you so much.
Yeah.